Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. Alright guys, welcome back. Hamish, what is going on, my friend? How have you been?
I'm doing...
You've been well?
Yeah, I've been well. I noticed you're starting to post some of the podcast clips on Instagram, so that's good for me because it's like with Instagram now you can like add, what is it called, like collaboration, where you post the reel, but then it also appears on my feed. So yeah, it's good. Now it works well because now we get episodes to go out on both of our Instagram pages. So yeah.
I've been enjoying it. I've been enjoying chopping them up, to be honest. It's interesting because what you raised a good point off there before is that podcasts generally have pretty low discoverability. So I think that's a really good point. So even just, and when you look at the retention, so for retention on any piece of content on YouTube or podcasts, it obviously starts at 100% retention because people have clicked on it, and then it slowly trends its way down to whatever your end retention is. So, but it means that, realistically, what we say in the 45th minute of the podcast is just not getting seen by as many people as what we say immediately in the podcast. So
true.
So it's good to kind of I think find those little snippets of the moments in the podcast, which is still really fun, and kind of get them to a wider audience. So that's been good. You can see the podcast snippets over on my Instagram or Hamish's Instagram if he accepts my collaboration request. But all of them, you can definitely watch all of them over on my Instagram, which is new.money.official. And what's yours, Hamish?
Hamish_Hodder is the account that I'm using at the moment, yeah.
We would appreciate a follow.
Yep.
If you're listening to us right now, why not? Open up Instagram.
Yep.
Go on.
Yep. Do it right
Please
now.
come along and follow us. Yeah. Except if you're driving. Okay. If you're listening to us in the car, okay, you get a pass.
Yeah.
But as soon as you park, I want to see that follow. How you been, mate? How you been going?
I've been well? I've been good, yeah. I have a video that I'm hoping to release soon. It's been delayed a little bit, unfortunately, out of my control. But yeah, hoping to put that out soon.
Nice.
So yeah,
very good.
Been doing that and working on another video, and yeah, that's the life of Hamish Hodder. Just 1 week making a video, the next week making a video. So yeah.
Yeah, week after, make another one, and walk the dog in the meantime.
Yeah, exactly right. What are we?
All right, Hamish. Well, let's get stuck into this podcast. We are talking. We had a story last week on the EU cracking down on the big tech companies. That has continued, so we've got another story to cover here. I'm also going to be talking about Tesla's delivery numbers. Just a quick thing on that because they were quite interesting, and the stock did a big move off the back of those delivery numbers. And then what are you chatting about?
I'm going to talk about the Redbox bankruptcy. There's an interesting story behind the bankruptcy of the kind of DVD kiosk business. And then we've got some central bank news from the US and Australia to talk about as well.
Yay, can't wait. Inflation updates, interest rate updates. It's so sad that that's like the most interesting thing that's happening in markets at the moment.
Yeah.
Like outside of sure, you got your Magnificent Seven, you got NVIDIA doing NVIDIA things, but then like after that, it's whatever the central banks are doing. It's not the most exciting of times, is it?
No, it's been quieter, unfortunately. So,
but that's all right. All right, Hamish, let's get into it.
With that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days. Do you want to start us off and take us through the Tesla deliveries? Because, I did see the stock popped like 10% or something on the news. So
Yeah.
I'm excited to see what's been happening.
Yeah. So what happened with Tesla delivery? So for context, last quarter, so Q1 of 2024, they produced 433,000 cars. They delivered 386,000. So they had a couple of problems, a couple of holdups, Red Sea drama, problem at the Berlin factory. Only got 386,000 deliveries done. This quarter, they produced 410,000 cars. So actually a little bit of a drop on the production front, but they delivered much more. They delivered 443 or 444,000 cars if we round up. So quite a good bump over Q1 of 2024. However, it's not the best, most accurate way of displaying delivery numbers and production numbers because Q1 is seasonally weak for all automakers. So if we compare the current deliveries to the same quarter, so Q2 of 2023, in Q2 2023, they delivered 466,000 cars, and this time around, they have delivered just 444,000 cars. So
Right.
there is actually a 5% drop in deliveries this time around versus Q2 of last year. However, somehow, you're right, Hamish, the stock managed to go up around 10% on the news. And what does that mean? It means that they beat analysts' expectations. So the analysts thought it was going to be much more of a bloodbath. They thought it was going to be much worse than what it was. And because it wasn't as bad as what they thought, the stock popped. So what do you know?
Yeah, there you go. Yeah, because I had not seen the deliveries at all, and I'd just seen the stock had risen, and I thought, you know what? I guess they've turned it around from last quarter, which looked a little patchy. But I mean, I guess it is. It seems like a moderate improvement. They certainly got the deliveries back on track, but yeah, it's still a decline from last year.
So I think that I don't want to talk about this for too long because there's not too much you can kind of take away from it. I think the things that we can take away from it is that this macroeconomic situation that we are all faced with is definitely a thing, and it's definitely affecting their demand, which, you know, this is a very cyclical business, automotive sales, that this happens. But I think that definitely shows there is a softening of demand. Tesla have been lowering prices and also offering other incentives to try and kind of boost up that demand a little bit, which obviously has worked to an extent. But obviously there's only so far you can push this, right, before you kind of make the car as cheap as you really can. So I think for that reason, maybe not right now, but across the next few quarters, as I'm sure interest rates will stay fairly high, financing of a big asset like a car is going to be quite difficult. People don't have that much money to free cash to spend. I think the next few quarters are going to be quite telling to see, well, I guess, what the baseline demand for Tesla vehicles are. So I guess we'll see.
Yeah, right. Have we got anything else?
The only other thing I found interesting, I was reading through a Reuters article, was how Tesla is going against the competitors, the main one being BYD, because Tesla and BYD are the biggest auto or EV makers in the world. And BYD actually said its second quarter sales of battery electric vehicles jumped 21% to 426,000. So Tesla, I've chucked the chart in there for you to see, but of course that doesn't help people at home. Tesla still has the edge, so they have 444,000 versus 426,000. But Hamish, from the chart, you can probably just see that BYD's not too far behind. Tesla is definitely facing that competition.
Yeah. So these are just global deliveries. Is that what this is?
Yeah.
So is BYD mostly selling in China, or are they selling?
Yep.
Okay. Yeah. Right. Okay. Makes sense. So
yeah, they're a Chinese company. They get a big home ground advantage, I guess.
Yeah, and it's
Tesla.
It's a big home ground. So
it's a very big home ground. Yeah. But you can argue the other way. I mean, Tesla also has a home ground advantage in the United States, but it's a smaller home ground.
Yes, true. Yeah.
and I guess the appetite for EVs is a little bit lower in the US versus China. That's all.
True. Yeah. Interesting.
So, yeah, it'll be interesting to see those two keep battling it out over the next couple of years. It'll be interesting to see who comes out on top. But they are, they're pretty even. I mean, BYD obviously doesn't focus on this. This is just looking at EV sales. So obviously Tesla is very much focused on the self-driving cars. They're also focused on the battery side of their business, their storage side of their business. They're focused on obviously the humanoid robots. So there's a lot more. I think there's a lot more category or revenue potential out of Tesla, or not revenue potential, but revenue segment potential out of Tesla than say a BYD. But BYD for the most part in terms of EV sales is definitely keeping up. But that is the world of Tesla deliveries, Hamish.
Yeah, there you go. I think it'll be the real test, and hopefully we don't actually see this, but if there is a real economic downturn and a lot of these auto companies actually go into being, burning cash flow. I believe Tesla is profitable on a cash flow basis at the moment.
I think they still are. I would actually have to check. Maybe I'll do that now while you talk.
Yeah, I'm pretty sure they are. But yeah, you would imagine if there is, if they're already seeing a slowdown just from some interest rate increases and the kind of the inflation environment, if there was an actual downturn, you would imagine they'd probably become quite unprofitable, as is kind of normal in the auto industry. Maybe not, but that'd be. Hopefully that doesn't happen, but that'll be a real test for who has a business that can come out the other side of something like that, which we haven't really seen for Tesla all that much yet. Like at their kind of mature or being at the scale they are now, we haven't seen them go through a kind of a deep recession. Besides 2020, which was obviously quite abnormal.
Yep. Operating cash flow was $200 million in Q1 and free cash flow was negative $2.5 billion, but they did note that they had AI infrastructure capital expenditure of over $1 billion in Q1. So
yeah, and you would imagine
some factors at play.
Tesla's still spending a bunch of capex that's not really necessary to maintain their business. It's kind of capex they're choosing to
$1.1 billion of net income in Q1, so that's still a positive, I guess.
There you go.
Yeah, there you go. All right, Hamish. Well, that is all for Tesla. I will chuck it over to you. And what do you want to talk about first?
Let's talk about a story I saw this morning. Actually, was the parent company of Redbox has finally filed for bankruptcy. The last kind of remnants of the DVD rental industry has finally fallen. And I didn't think there was going to be too much to this story to kind of write about. But then as I kept kind of reading it, I found some kind of funny things that we can kind of talk through. But the first thing that just caught my attention was the name of the parent company that owns Redbox is Chicken Soup for the Soul Entertainment.
Wow.
How's
what a
that
name.
What a great name. And so now I was like, how the hell did they get that name? Why do they have that name? And why does a company that has Chicken Soup for the Soul in the name, why do they own these kind of Redbox kiosks where you could rent DVDs? So it piqued my interest, and there's so I kind of went through and looked at the background, and I'll bring this all back to talk about Redbox as well, and kind of a little bit about their history, as now they're going to go, well, they are in bankruptcy. But essentially, so Chicken Soup for the Soul Entertainment is a media and consumer goods company which is known for its book series, Chicken Soup for the Soul. As I said, the company's history is pretty wacky. It's as wacky as the name. I ended up going down a deep rabbit hole this morning. So the company was founded in 1993 by two motivational speakers, Jack Canfield and Mark Hansen. And essentially, so they'd be these motivational speakers. They would do these big events, and they created a book series that kind of compiled all of these kind of inspirational true stories from members of their audience. So that's how this business started, which is a long way from DVD rental, but
yeah,
we're gonna get there. You're gonna see the path that they took to get there, but anyway, yeah. So they created this book series called Chicken Soup for the Soul, and it was rejected by all major publishers. So they tried to get it published and it was just rejected. But they did find a niche self-help publisher to take it on. And yeah, so that was kind of the start of their business. From there, they expanded into other similar book series. They have Chicken Soup for the Teenage Soul. They even had a 19-episode TV series made in 1999 based on the stories in the books.
Interesting.
So that was kind of the start. Eventually, the two self-help gurus then sold the company in 2008, and the new owners started just creating and selling all kinds of products. They started a pet food brand called, you could probably guess, Chicken Soup for the Pet Lover's Soul.
Wow,
they started.
They just run. The entire value of this company is just in the naming convention at this point. It's just like,
yeah. That's exactly what I was going to say.
Chicken Soup for the Soul smartwatch.
It's like the entire value of this company was just in the trademark, and they were just like, how many products can we slap this on? They started a line of soups, which makes sense. I can't believe it took them.
That does make sense.
It took them almost 20 years to make to get to soup. But they got there. They have a line of sauces and then a bunch of other prepared foods as well, all with the name Chicken Soup for the insert food type soul. And so, as I said, it's like, once they got the trademark, they just like kind of slapped it on as many products as possible. In 2013, so this is 20 years after the company was founded, this is finally where the business gets into the entertainment industry, besides that kind of TV series they made based on their books. And they basically were a company that was buying up a bunch of streaming services. So obviously in 2013, streaming was very fresh. Netflix's streaming service started in 2007, but up until 2011, they still bundled kind of the physical DVD rentals with their streaming service. So, in the early 2010s, there was kind of all of these media companies that had little streaming services, and some of them ended up getting sold off. One of them was a streaming service called Sony Crackle, which was Sony's streaming service. That they obviously ended up selling and decided not to pursue streaming. But yeah, it turns out there's a bunch of little tiny streaming services that big companies sometimes like Sony created and then just kind of got rid of, decided it wasn't even worth it. Like you think we have enough streaming services today, like there's enough competitors, but there could have been way more if like Sony and some of these other businesses had kind of stayed
Very interesting. All the entertainment companies want to make streaming services now. Sony back in 2013 was like, nah.
Yeah, it is interesting because I think Sony, that in of itself is an interesting story because Sony very early on decided we're not going to try and sell direct to consumer. We're just going to do what we do which is make movies, and we'll just license them to Netflix, which is what they do. And then they also license to other companies, but they mostly deal with Netflix. So, very distinctly different strategy to Disney, Warner Brothers, who they're all trying to do it all from production to the consumer. And then so Chicken Soup for the Soul Entertainment continued to buy up media assets. They bought some film distributors, bits of movie IP here and there, but none of it was particularly successful. It was never really going to be a successful media conglomerate. And so how do we get to Redbox? Because the story was supposed to be about Redbox. Well, they actually only bought Redbox in 2022, which is kind of crazy. So really, Redbox has absolutely nothing to do with this company, except that the amount that they paid for this business, especially when I get into some of the numbers, is kind of funny. And it's also not really surprising now that they're going bankrupt. But in 2022, for Redbox, which is a business that has like 20,000 kiosks that sell DVDs or rent, people can rent DVDs, they paid $360 million for that
too
business.
Much. There's no way you can convince me that they're making sales enough to to justify that valuation. That's ridiculous.
No, and
What do you think? They're like, oh, this is a great opportunity. No one else, we can buy this for $360 million. No one else is doing this. No, it's like they didn't stop to think like, why is no one else doing this?
Yeah.
Look, there's not even a shop you can go to where you can rent out a DVD. No. This could be something.
Yeah, they've cornered the market. There's no other competitors. They were doing well that Netflix had to exit in 2011. Like Netflix bailed out. They were like, we can't compete with you. Like,
dear.
No, yeah. So, that number sounds insane in of itself, but once you look at some of the numbers, it's also pretty funny. Redbox peaked in 2013. Their revenue was actually $2 billion a year in 2013, which is kind of crazy. DVD rental business can be, yeah.
And did they have stores, or they were always just these kiosks?
No, so they were always the kiosks.
Yeah. Okay.
So yeah, and I mean,
$2 billion in revenue from kiosks sounds like that's pretty crazy.
And they also did have a streaming kind of business as well. But right. I don't know exactly how much money that was bringing in.
Right.
Compared to the kiosks, but yeah, so that was their peak, $2 billion in revenue, and then since then it was just kind of a steady decline. By 2018, revenue was $1.1 billion. That's quite a decline.
You couldn't even pay me to take ownership of this company. Like, I just wouldn't do it. Like,
well, that's why it's absolutely insane
like
that they paid
1 in a million shot of a turnaround. Sorry.
Yeah, it's just crazy. Like paying $350 million for a company that's doing $50 million in revenue, and even when they were doing $500 million in revenue, they were still losing money. So,
yeah,
it's just it's kind of insane that they thought that was a good idea. And then of course, 1 year later, they filed for bankruptcy. The company has $1 billion in debts. This is the chicken soup kind of business. Has had $1 billion in debts. And they just filed for Chapter 11 bankruptcy. They've also failed to pay over 1,000 employees in the last month.
Yeah.
So
they're gone. See you later.
Yeah, and I mean the Redbox business itself might continue. I mean, they're obviously going to sell all their assets to try and pay creditors, and it's possible someone buys the kiosks and keeps the business alive.
If anyone out there is thinking, don't do it.
Well, I was thinking we could go in. We go 50-50.
Okay.
Yeah, we could.
We're gonna turn the Young Investors podcast into like a Berkshire Hathaway. We're just gonna start acquiring businesses.
Yeah. We can make a bid. We could bid. How about we do $50 each? I'll send it into the.
All right.
I'll send it into the chicken soup company. I'll let them know. Sounds like a fair price.
Help.
So no, I think there's a good chance Redbox is actually done. That the business will not be taken on by somebody else because it's just such a money pit. But yeah, there you go. The final part of the DVD rental empire or industry has finally fallen.
Just trying to think if we even have hardware that can play DVDs anymore. Can you still play DVDs and stuff like on an Xbox or like on a PlayStation? I think so.
Yeah, you can. Yeah, you definitely can. Yeah.
Yeah. But beyond that, I don't have any other means to.
No.
I have a CD? No, I don't have a CD drive in my PC. So.
Yeah.
Pretty useless now, aren't they? Crazy.
Yeah.
It's crazy how technology changes. When I was a kid, we would just have CDs and DVDs just all over the house.
Yeah, you would have stacks. We used to have a TV cabinet that the TV was on, and then below it would have like these kind of like slots, and you would like fill all the slots with like DVDs.
Yep.
Yeah, but all of that is just completely gone now.
Gone are those days.
Yeah.
Yep. Technology moves forward. Crazy. Well, goodbye, Redbox.
Goodbye.
Enjoying Blockbuster and all those other companies.
Yeah. I'm mostly upset about the soup though. Like, what am I going to eat now? Am I like?
The soup's the most valuable part.
I need my chicken soup for the soul. I need my soup. I need my sauces.
You need. They had a really good sweet chili sauce. Oh, it's devastating.
Yeah. It's my Friday night ruined. Who am I going to rent the DVD from? What am I going to eat for dinner?
Where am I going to get my hot sauce from? Oh, no. That's all falling apart for you, Hamish. I hope you recover. All right, let's talk about, you want to talk about Meta?
Yes. What has Meta done? What's the fine? Just what's the fine this time? 10 billion, 20 billion?
No fine quoted yet. No, they're just picking fights at the moment.
Okay.
But yes, we were talking about how the EU had a problem with, what were we talking about last week? Was it, what company was it? Google? Apple
in their App Store.
That's right. And their App Store. Yes. Well, guess what? The EU now thinks that Meta's ad business is illegal. Look out.
Uh-oh.
Meta, they're coming swinging. The EU seems to be enjoying its newfound monopoly mashing powers. Last week, the organisation enforced its antitrust legislation for the first time with a preliminary finding against Apple, which it quickly followed with another finding against Microsoft. Now it's Meta's turn. On Monday, the European Commission said in a preliminary finding that it believes Meta has violated the new Digital Markets Act, or the DMA, by implementing a system in which Europeans can pay a monthly subscription to escape targeted ads. They argue privacy over your data needs to be free. Meta offers users a choice between being targeted by ads based on their personal data or paying to avoid them. The system was rolled out after the EU ruled that Meta must get consent before showing ads to users, a decision that threatened its business model of tailoring ads based on individual users' online interests and digital activity. However, the European Commission said that this binary choice does not give users the option to freely consent to the combination of their personal data from various Meta-operated sites. It also found in a preliminary investigation that Meta fails to provide them a less personalized but equivalent version of the social networks. So Meta's basically saying, okay, our business is around, being free, but because it's free, we're going to serve you targeted ads. We need to generate ad revenue. And the EU said, no, you can't really do that. So they said, okay, fine. We'll offer people an option where they can pay for an ad-free experience, and then Meta can obviously still collect the revenue from those people, so it doesn't affect their business. And the EU has said, you must opt. There must be a free option. You must ask people. They must have the option to choose to not have their data collected.
Yeah.
There should be a free option. What do you think, Hamish?
Yeah, I think, last week I kind of said I like some of the things that the EU is doing, some of these crackdowns on tech companies, and some of them, I like some of them and I don't like some of them. And, we were talking about Apple last week and some of their monopolistic powers and anti-consumer actions in their app store. And I agree with some of those things. This I just don't agree with. Right. Like, I just don't, like, if that's their business model, that it's a free site and you get ads or you can pay for no ads, that's the business. I don't think anybody needs to have a Facebook account. So, there is a third option, which is just don't go on the site. The way that EU makes it sound is like everybody must use Facebook, and therefore it's not correct that they have, that they're collecting personal data on the free version. That's not the case. You can just not use it. So
it sounds like the EU is saying to Meta, you must allow people to use your amazing products and services, and you must not be able to generate revenue from that. You must give them an option where you do not generate revenue from that.
Yeah. Or just pay us $30 billion a year in fines or something like that. Yeah. Whatever it is, 10% of revenue.
It seems odd,
Yeah. See, like these kind of, and I think it's completely reasonable if you disagree, but these kinds of regulations to me, or these kinds of rules, seem excessive. It seems like a government or a regulator telling somebody how to run their business in a way that is just, to me, it's just over the top. Because it's not like you're forced to use this platform. It's not like you need to use Facebook to survive. It's a service that is available, that they've created, that they've put billions of dollars into. And of course, if their business model is it's free and they run ads, of course they're going to be using your personal data to make the ads good. That's how the advertising business works.
That's how it works. That's why they can keep it free.
It's no different than Google's entire business, and YouTube as like a sub part of that business. They use your data and they run ads. And if you don't want ads on YouTube, you can just pay for it and you don't get ads. To me, I don't understand these kind of regulations. To me, this is it's excessive.
There's no world where you could walk into the grocery store and take a basket of groceries and just walk out and say, hey, what about the free option? You need to give me the option to freely consent to taking these groceries. It's like, you want the groceries, you got to pay for it. That's their business. That's the deal. Like, that's the deal when you walk into the grocery store.
Yeah.
You want to buy an apple, you got to pay for the apple. But now we're just going to have ads printed on apples. There you go.
Yeah, and I think
that doesn't make sense.
Another thing the EU did was they want to make they want to make companies like Google detecting ad blockers illegal, which is another thing that I completely think is ridiculous. Like, I think it should be completely within Google's power to try and detect ad blockers and prevent you from using their services if you're blocking ads. That one's probably not a popular opinion. But again, it's like, if their business model is it's free and they run ads, they should be able to enforce that on their own services. So yeah, I don't know.
They got the money. Why don't they just acquire all the ad blockers and just shut them down?
You know what? They should just acquire the European Commission.
That's really what the EU's going for.
Oh, they're going
right. They're being so annoying that they just get acquired by the big seven.
Yeah. The EU has been acquired by Google. Oh, nice. Sick.
In a crazy turn of events.
Yeah.
That's wild. What else have I got here? In a statement to the Daily Upside, a Meta spokesperson said the subscription plan, quote, complies with the DMA, and added that Meta has offered to slash the cost of its subscription by 40%, but it is still awaiting regulatory feedback. So we should probably talk about the cost of the plan. So at the moment, a base subscription costs between €9.99 and $12.99 per month, plus €6 to €8 per additional account. So a person with a Facebook and an Instagram account might expect to pay $20.99 to avoid ads. The company told the EU it could lower that to $5.99 per month plus €4 per additional account. That's $9.99 per month total for Facebook plus Instagram, or $119.88 for an ad-free year.
Yeah, that's a lot.
It's not like they're. I don't know. What do you think? They're not.
That sounds like
egregious, are they, with their pricing? I don't know.
No, I think it. I mean, it sounds pretty expensive. I don't know, because I think I'm so. This is just my experience, at least. But on Instagram, for example, I don't even really register the ads. Like, obviously, I see them, but like, because it's just so part of like the natural experience. I don't know if I would ever pay for no ads on Instagram, whereas on like YouTube, it interrupts what you're watching for like 30 seconds sometimes. So it actually is kind of, especially if you're like clicking around different videos and you're always getting a pre-roll, it can actually be quite annoying to get ads. So removing it, actually provides a big benefit. But I guess in this case, maybe you're doing it so that they don't use your personal data. That might be your motivation to do it. But yeah. I don't know.
That's true. On Instagram, I definitely find that, and even on Facebook, the ads are not annoying.
Yeah.
You can just flick straight past them. Whereas, on YouTube, you are forced to wait for that skip button. So, you're right. It is interesting. For what it is now, it does sound more expensive. You're right. What else have I got? Interesting quote from Dr. Bernie Hogan of the Oxford Internet Institute. Quote, I think they are treating the EU like a customer rather than a custodian if they are trying to haggle prices. It misreads the ruling by the EU and tries to reframe the EU as being stingy when they are examining this from a rights-based perspective, not one of the specific cost.
Yeah. So doesn't seem like just changing the price will have any effect. But it's pretty interesting. I mean, Facebook or Meta is they've got a number of problems with the EU. Well, the EU's got a number of problems with Meta on a bunch of different aspects of their business at the moment. There was even they're even having trouble with their marketplace business, which is this is maybe the most absurd EU regulation that there is, which is they said that Facebook Marketplace was an unfair monopoly because they don't charge fees, and therefore like they basically killed eBay because eBay takes fees. That was legitimately a complaint that the EU had with Meta, which was that they had an unfair monopoly because they integrated it into an app that already had billions of users, and they didn't charge fees. That's a
They
real
don't make any money
thing.
from it. That's better for the consumer.
Yeah,
That's pro-consumer.
like even if it is a monopoly, who cares? It's free.
It's free.
It's completely
monetizing
free.
it.
The only person making money off it is Apple. For people who are like, it's not even like somehow Apple is making money from it, even though they're not even involved. But yeah, that's so Meta is dealing with that. They're dealing with this ads problem. They're dealing with the transfer of data, which they normally would transfer data from the EU back into the US, and they're not allowed to do that anymore because they run all of their kind of ads through kind of one system. There's a bunch of things that Facebook Meta's been dealing with. So yeah, I don't think it's going to end anytime soon. But I mean, it's not like it's really had any negative impact on their business thus far. They just kind of pay as we spoke about last week, they just pay their $5 billion non-recurring fine every year. So
yeah, exactly. It's a non-recurring expense that occurs every year.
Yeah.
Anyway, that's all I got. We'll see what happens. EU, good luck. Meta, good luck. We'll see. Ding ding. Just put them in the ring. Make them fight.
Make them fight. Yeah. Just
Make them fight.
Well, that's what. Yeah, exactly. That's what Zuckerberg's been training for, right?
Exactly.
He's gonna
big showdown with the EU.
Yeah.
He's going to take them all out.
Yeah.
Whoopsh, whoopsh. All right, I am talking gibberish right now, Hamish. Take us through the central bank news, and then I think let's finish up after that.
Yeah, this is a pretty quick story. There's nothing too crazy here, but we'll start in the US and then we'll look at Australia. Jerome Powell spoke at a central banking forum in Portugal this week. Shame I missed that. That sounds it sounds like a thriller.
That's riveting. We should have booked flights.
Yeah, central banking forum. Jeez. He gave a bit of an update on the US economy. He said, we've made quite a bit of progress that doesn't make any sense. We've made quite a bit of progress in bringing inflation back down to targets. The last inflation reading and the one before it, to a lesser extent, suggests that we are getting back on the disinflationary path. We want to be more confident that inflation is moving sustainably towards 2% before we start the process of reducing or loosening policy, which is pretty much the exact same thing that he's been saying in every other meeting. He was asked specifically about a potential rate cut in September, and Powell responded, "I'm not going to be landing on any specific dates here today." So,
AKA no.
AKA absolutely nothing new said from Mr. Jerome Powell. And then in terms of Australian news, I just wanted to comment on the fact that Australians can't stop spending money. As much as interest rates have gone up and rent is getting very expensive and mortgages have gotten more expensive and house prices are impossible to buy, the housing market's impossible to get into, people keep spending money. New retail sales data showed growth came in twice as strong as expected. Came in from the ABS data for May's monthly retail turnover came in at 0.6% up compared to 0.3% expected.
There you go.
And of course,
people are already outspending their tax cuts.
Yeah, exactly. Well, I mean, pretty much. I mean, maybe not their tax cuts, but certainly this time of year, people do tend to accelerate their spending because it is the end of financial year. So you get kind of those end of financial year sales, and of course, you get businesses as well trying to get in some last kind of tax deductions.
Yeah. Yeah, that's very true.
But that was basically it. There was just a couple of little tidbits of central banking news that I just wanted to chuck on the end there.
Nice. Perfect. What a well-rounded podcast, Hamish. Oh, let's finish on this. Do you watch the debate?
Oh, yes, I did. Yeah.
Yeah. What'd you think?
I saw, well, there was one human on stage. No, it's,
true that. Oh, gosh.
It's kind of crazy. I'm still so surprised that they are still going to run Biden. I think that would be a massive mistake, especially now that everybody, there's been clips of Biden, messing up his words, but I think for the first time, probably a lot of people saw a full, what was it, like an hour or 2 hours of him tripping over his words the entire time. And so, it's pretty clear that those clips are not clips out of context, which, some people might have been thinking he's just getting clipped out of context. Clearly that's not the case. So yeah, it's going to be certainly an interesting election. That's for sure. Yeah.
Yes, I don't see a world where, I don't really care much for politics. I'm pretty, what's the term, apolitical. But I just don't see how Joe Biden is going to win this election. Maybe I'm wrong. I don't know. I'm not an American, but I do not see it happening. It's interesting that so far they haven't replaced him, because this is why I think I've made this point before. It's a bit. I used to kind of find it funny that Joe Biden would trip over his words and he'd read the teleprompter wrong or something, or he'd read a cue instead of like a quote or something like that on the teleprompter. End of quote.
Yeah. Repeat the line.
Read that again. Yeah, repeat the line. Yeah, that kind of stuff. I find it much harder to laugh now because he's just an old man. He's just stuck. I think at this point he's stuck. Like, his body is starting to fail. His mind is starting to fail. And he just can't. He needs to go into retirement. Like, this is when anyone else in the workforce would go into retirement. And if you start declining cognitively, you'd go into care. You would go and get care, and someone would look after you. Like, this is an unfortunate reality of being a human, is that some people do have that cognitive decline, and we can't really do much about it.
Yeah.
I think the thing that stood out to me is when I started seeing people compare his debate performance in the previous election cycle to the debate this time round. And it goes from him, sure, he's still an old man, lasts 4 years, but it's crazy watching how much of a difference 4 years has made. When he's still 4 years ago, he's like, I tell you what, this guy is doing there. He's up and about, and he's alert, and he's like, oh, I can't believe this. And then this time he's just like,
Yeah.
It's really sad.
It's been a massive change over just 4 years. So yeah, it's hard to imagine that it would be even possible for him to run and do another 4 years. So,
but that's what I think. I think if he gets or if somehow he beats Trump later in the year, how long is he going to stay the president for? Because will he just step down almost immediately to let someone else through? He's like, all right, we've won the election. Now I really need to go into a care home. And the way that his wife speaks to him now in public, you see that clip where she's like, well done, Joe. You answered all the questions. It's like talking to him like he's a toddler again. 'Cause his mind's just slipping.
It's kind of hard to believe that this is that's real. This is you're watching it with your eyes and your ears, and it's it's crazy that because just being having full having is the bare minimum you would expect from the leader of basically the world's military. It's that's the bare minimum. It's
pretty wild,
and even that isn't there. So yeah, I don't know. It's not to say Trump's going to be any good, but yeah, that was crazy to watch during that debate. For sure,
it was crazy to watch. Also, presidential debates have gone so downhill. Maybe it's just the characters in question at the current time, but they didn't talk, they're talking about who has a lower golf handicap. It's stop, come on. Who's going to be the president of the United States of America? The largest economy in the world, the most powerful military, and you're talking about who has a better golf swing? Come on, guys.
Yeah.
It reflects very poorly. I don't think you'd have Xi Jinping over in China talking about his golf swing, that's for sure.
No.
I think they're pedal to the metal, growing their economy and working with the other very strong powers to eventually be able to topple the US. And when you see a presidential debate talking about, oh, how was your last round of golf? I've won 2 championships, I tell you. It's like, man, holy smokes. Anyway,
oh dear.
Rant over. Good luck to all involved. Good luck, America. Sorry, it doesn't bother us. We're Australian. We don't have to vote.
Yeah.
It's no consequence to us.
Thank God I don't need to choose.
Good luck, America. With that said, guys, we're going to wrap up. Hope you enjoyed. Thanks for chatting as always, Hamish.
No worries.
And with that said, we're going to bounce out of here. We'll see you guys next week.
See you guys.